The market is pricing in 1973, the oil shock, the stagflation. Everyone is looking at history and assuming it will repeat. But they are missing something, and it is creating the biggest opportunity of the year. The 1973 playbook is wrong. Yes, oil is spiking. Yes, the Strait of Hormuz is closed. But there is a deflationary force that was not in the room last time oil did this: artificial intelligence. In 1973, there was no deflationary force to counter the inflationary shock. In 2026, AI is driving compute costs down exponentially. That changes everything about how this oil shock will play out. The market saw an oil shock and did what it always does: sold tech, bought defensives. That trade is wrong. The companies building the AI economy do not sit in the damage path of this oil shock. Nvidia is 33% below its 5-year valuation average. Micron is at a 69% discount. These companies did not get weaker. Their businesses are stronger than ever. They got caught in a sell-off for a different category of business. $4.5 trillion in institutional cash is sitting on the sidelines. When the market realizes its mistake, that money will move, and it will move fast. The all-clear signal is not the entry point. By the time everyone agrees the coast is clear, the pricing error is already gone. You have to position before the signal breaks. Let me explain why the market is scared. In 1973, the S&P 500 lost 40% of its value. It took 7.5 years to recover. That is what everyone is afraid of repeating. Today, Iran closed the Strait of Hormuz. 20% of global oil passes through there. Oil prices are up 40%. The parallel to 1973 is real. Fourth quarter GDP has been revised down to 0.7%. Combine that with rising inflation, and you have stagflation. That is what the Fed is trying to avoid, but here is what the market is missing. 2026 is not 1973. AI could help prevent a steep downturn. The conflict with Iran could also resolve quickly. Investors should not expect the same path as 50 years ago. AI is a productivity boom. When companies become more efficient, profits rise. The deflationary force of AI can offset at least some of the inflationary pressure from oil. History does not repeat. It rhymes. What worked in 1973, buying gold and defensives, may not work in 2026. What failed in 1973, buying tech, may be the winning move this time. The opportunity is in the valuation gaps. Nvidia at a 33% discount. Micron at a 69% discount. Real companies with real earnings caught in a sell-off that makes no sense for their business models. $4.5 trillion at 5% interest earns $225 billion per year just waiting. When the signal breaks, that money moves in days, not weeks. The window between too early and too late is narrow. The sell-off has been indiscriminate. The market sold tech because it always sells tech during oil shocks. It did not ask which tech. Companies are actually vulnerable. AI infrastructure companies are not consumer discretionary. Their demand does not disappear when gas prices go up. Nvidia sells chips to data centers. Data centers run on electricity, not gasoline. The correlation between oil prices and Nvidia's earnings is very low. The market sold Nvidia because it was in the wrong category. Micron makes memory chips. Every AI server needs more memory. That trend does not reverse because oil prices are higher. Higher oil prices might actually accelerate the shift to AI-driven efficiency. Nvidia earnings are up 78% year over year. The business is growing. The price is dropping. That is a pricing error. Micron earnings are up 112% year over year. The company is more profitable than ever. The market is selling it because of emotion, not logic. Meanwhile, defensives are not cheap. Utilities at 22 times earnings. Consumer staples at 24 times earnings. Historically, these trade at 16 to 18 times. You are paying premium prices for low-growth businesses. Compare that to AI infrastructure. Lower price, higher growth. That is the opposite of what the market is doing. That is where opportunity lives. The market has it backwards, selling high growth, businesses that are not oil sensitive, buying low-growth businesses at premium valuations. That pricing error will correct. The question is whether you will be positioned. Here are 5 actions you can take right now. 1. Understand the thesis. Do your own research. Understand why the 1973 playbook may be wrong. The more you understand, the more confident you will be when others panic. 2. Look at the valuation gaps. Nvidia, Micron, AMD, Broadcom. AI infrastructure companies caught in the sell-off, strong businesses, growing earnings, compressed valuations. 3. Check defensive valuations. Utilities and staples at premium prices. That premium could disappear when the market rotates back to growth. 4. Keep dry powder, 20 to 30% of your portfolio in cash, ready to deploy. When institutional money starts moving, you want to move with it. 5. Do not panic sell. If you already own AI names, do not sell at these discounts. Selling at the bottom locks in losses. The market will recover. The pricing error will correct. Be patient. The big question is timing. When will the signal break? No one knows. That is why you position now, not when everyone else is moving. Watch oil prices stabilizing. Watch Iran negotiations. Watch Fed signals. Watch tech earnings. When these shift, the market will shift. The opportunity is now. The pricing error exists today. When the market realizes its mistake, these valuation gaps will close. By the time the all-clear signal comes, the opportunity will be gone. Do not follow the herd. The herd is buying defensives at peak valuations and selling AI infrastructure at discount valuations. The herd will be wrong. Do not be the herd. The smart money is contrarian, patient, disciplined. It does not panic sell. Be like smart money. Even if we do repeat 1973, the market recovered. It took time, but it recovered. The only people who lose are those who sell at the bottom, but I do not think we will repeat 1973. Because we have AI, a deflationary force running against the inflationary shock. That changes everything. The market has given you a gift. AI infrastructure names are on sale, not because their businesses are weak, because the market is scared. Do not waste this opportunity. You have time, but not much. The window is closing. Every day the oil shock continues. More investors capitulate. Do not be one of them. Subscribe to this channel, hit the bell. Every week, I give you market insights you will not get elsewhere. What the data shows, what the smart money is doing. Next week, the new Fed chair has a plan to reduce the debt, and you will not like it. How it will affect your money. What you should do before they act. Subscribe so you do not miss it. The market is wrong, but you do not have to be. You have the information. You have the analysis. You have the plan. The question is whether you will act. Do your own research. Look at the valuations. Read the earnings reports. This is your money. Take responsibility. The unthinkable thing about to happen is AI saves the market from the 1973 fate. The deflationary force of AI offsets the inflationary shock. The market stops pricing in 1973 and starts pricing in the AI future. History echoes, but it does not repeat. The outcome will be different because AI is different. Because you are better informed than investors in 1973. Your wealth, your future, your decision. I have given you the plan. Now execute. No one can do it for you. Circle today's date, your starting line. Circle a date 3 months from now, your review date. See whether you acted. Learn from both. Prepare now, not when everyone is already moving. Do your research. Check the valuations. Keep your dry powder. I will see you in the next video. Your wealth, your future, your decision.